Hello, in today's video I'm going to explain about Bitcoin Misery Index, or shortened to BMI. What is the Bitcoin Misery Index, BMI? The Bitcoin Misery Index, BMI, is a measurement of Bitcoin's price action. It ranges from 0 to 100 and uses contrarian economic indicators, in which opportunities move opposite of conventional indicators. It incorporates several different market factors such as win ratios and volatility. Understanding the Bitcoin Misery Index. The BMI was created in 2018 by Tom Lee, a co-founder of Fundstrat Global Advisors. The index incorporates the percentage of winning trades to total trades and volatility. It shows a value of 0 to 100. The index indicates misery when the value is below 27, which means the traders are not happy with the results of their trades. As a contrarian index, the closer the index is to 0, the louder the signal to buy becomes. It's a buy signal because traders believe prices may not go any lower and that profitable trades are on the horizon. Price history. Interest in Bitcoin increased dramatically in 2016, with Bitcoin price rising 123% by year's end. By 2017, investors were pouring into Bitcoins, pushing the price to just under $20,000 in December. Investors who expected Bitcoin prices to continue their meteoric rise after December 2017 were met instead by a decline of over 50%. Bitcoin's popularity continued to grow through 2018, 2019, and 2020. In 2021, its price skyrocketed to $69,000 in November before plummeting to around $35,000 in January 2022. Threats to Bitcoin profitability. As interest in Bitcoin has risen, so too have threats to its stability. As a result, several countries have banned or created substantial regulations targeting cryptocurrencies. For example, China banned cryptocurrency over concerns of financial stability, money laundering, and fraud. Cryptocurrency investors also have to deal with the possibility that their digital assets can be stolen if stored in hot wallets. Digital wallets that are actively connected to cryptocurrency exchanges via the internet. Several exchanges have been hacked, such as Mt. Gox, which lost over $450 million. And CoinCheck, which lost over $500 million. The uncertainty about regulatory and security has given rise to a new misery index, the BMI. Goals of the Bitcoin Misery Index. According to Fundstrat Insight, the BMI is a proxy for investors' sentiments about Bitcoin's price action. It indicates whether traders and investors are feeling happy, neutral, or miserable about prices. Cryptocurrency trading and investing expose you to several types of risk, including transaction risk, interest rate risk, leverage risk, counterparty risk, and country risk. Unlike trading United States dollars or euros, you have to contend with other risk created by assets based on decentralized ledger. Without a central bank to act as a guarantor, you may have little recourse of protection if something goes awry with the cryptocurrency. The highly risky and speculative nature of Bitcoin investing favors those who can quickly analyze shifts in prices and understand the impact of new announcements, and place buy or sell trades accordingly. Indexes create a tendency in investors to self-fulfill prophecies. If as a group investors believe when an index hits a specific level it signals an opportunity to buy, then they will wait until it hits that level to start buying. While indexes are sometimes helpful as early warning indicators of market sentiment, they are backward-looking measures. The BMI cannot predict whether hackers will attack a cryptocurrency exchange. It won't be able to predict whether the Securities and Exchange Commission will approve a new United States-based exchange or Bitcoin-backed security. It will only tell you what other investors and traders felt at any given moment in the past. What is the Bitcoin 200-day moving average? The 200-day moving average is a gauge of an asset's long-term performance. For Bitcoin, it measures a 200-day moving average price. Did Bitcoin lose value? Bitcoin is a volatile asset. Its value changes daily. It reached a record price of $69,000 in late 2021. So it has dropped in value since then. However, it has increased in value over its lifetime many times over. How many Bitcoins are left? As of February 2022, there are roughly 2 million Bitcoins left to be mining. Misery Index definition. The original Misery Index is meant to measure the degree of economic and distress felt by everyday people due to the risk of or actual joblessness combined with an increasing cost of living. The Misery Index is calculated by adding the unemployment rate to their inflation rate. Since unemployment and inflation are both considered determinal to one's economic well-being, their combined value is useful as an indicator of overall economic health. The original Misery Index was popularized in the 1970s with the development of stagflation, or simultaneously high inflation and unemployment. Understanding the Misery Index. The Misery Index has two components, inflation and unemployment. Inflation refers to the rate at which money loses buying power due to the rise of consumer prices. Unemployment, as measured in the United States, is the number of able-bodied adults who are actively looking for work. As a fraction of the total workforce in most cases, these numbers are inversely correlated. When more people are employed, prices tend to rise, and vice versa. Economists generally consider full employment to mean an unemployment rate 4 to 5%, and the Federal Reserve targets an inflation rate of 2%. Therefore, a satisfactory Misery Index rating would be in the range of 6 to 7%. Thank you for your attention. You are listening about BMI, Bitcoin Misery Index, and the definition of Misery Index.